New details on Knight Capital and concerns about its line of credit with JPM. Our Charlie Gasparino has learned that JP Morgan suspended Knight's line of credit in recent days. Robert Gray is outside Knight Capital headquarters in Jersey City, New Jersey, with more. Robert?
Hey, Dennis, that's right. And that's one of the pressing questions here. Will Knight Capital find, well, enough capital to keep the doors open and the business going while they're looking for a suitor? And who would that suitor possibly be? They're working with investment bankers. That is the word on the street right now, to find new suitors and trying to get a new credit line to keep the doors open at least through today. And it looks like that is being accomplished. You know, we haven't seen any employees coming out. They've been ordering lunch in for a second day. We've seen the pizza boxes go by and the sandwiches going in here within the last little while. So they're definitely working the phones in there. They're calling up their books out there, and that is something to watch, is the employees. Will the employees stay as part of any deal with those books? Of course, their contacts out there. Keep in mind that Knight Capital basically handles about 10% of daily volume in U.S. stocks, Dennis. So definitely a big player out there. But as of right now, Ameritrade and E-Trade and those guys are not trading through Knight yet, trying to work on that. They have to repair basically their reputation with the clients. Back to you.
All right, thanks very much, Robert Gray.
Well, let's stay on the story here for just a moment. Who is to blame in the Knight Capital debacle? Is it man or machine? 10Xer CEO Jeff Ma and Sadis & Goldberg Financial Services head Ron Geffner join us in San Francisco. Ron is on the phone to help me break down the August algorithm glitch, as it's being called, that cost Knight Capital millions of dollars. Jeff, I want to start with you. I'm being told that you have spoken to somebody that maybe has a theory about what exactly went wrong in Knight Capital's mathematical rhythm.
Yeah, I mean, I think that there's a lot of stuff that probably went wrong, and if the question is man versus machine, I think this is clearly man. There's just some jokes going around about maybe this was a negative sign caused in the wrong place, but the bottom line is that what happened
well,
is
hold on,
that
Jeff. Is it a joke, or are you serious? We need to be clear.
I've heard someone who it is a theory that there was, it's a mistake. It's a human mistake where there was a careless mistake that was made. And it wasn't tested for properly, and then when it got out into this sort of production environment, it caused a problem, and it caused them essentially to buy high and sell low for a period of time. So it was a human mistake.
Real quick, before I go to Ron, I do want to ask you this. I mean, trading algorithms have become very commonplace with market-making companies, whether it's a Knight Capital, whether it's a Barclays or a Goldman or Morgan Stanley. They're all using it. Do you think that these are fallible? I guess mathematical equations, you think that they're fallible? I'm not the mathematician you are. You tell me.
I think that they're a lot less fallible than human beings are. I mean, and at the core, people always blame machines for these things, but humans program the machines. And if the humans program them incorrectly, they're not going to be able to get the right answers.
All right, let me go to Ron on a couple of things here, because if you look back, Ron, through history, it's great to hear you anyway. We've had a lot of issues, Ron, a lot of issues that the SEC is going to have to look at. You used to be at the SEC. I take this to you. You had the Knight issue, the Facebook IPO. We've had trading issues with the NASDAQ last year, a separate issue where a bunch of trades had to be cut off. I mean, this has been over and over. The flash crash. I mean, it goes on and on. What does the SEC need to do? Panel, inquiry, Ron, what are they going to do?
Well, for a few points, Charlie, and you raise a really good overview by looking at the history. Reading and listening to some of the speculators blaming the SEC for doing nothing, I would say those people really need to educate themselves. If you look at the history of the SEC, they've actually issued requests for information in early 2010, before the flash crash, trying to gain information. They implemented circuit breakers in late 2010. Subsequently, they have new circuit breakers or other controls coming in line effective February of 2013. First and foremost, the SEC is probably already in there gathering information, speaking to executives and speaking to everybody down the line, trying to assess what went wrong. With new technology, you're going to always have new wriggles. I remember during the days of the horse and buggy, I don't think they had too many car accidents back then. Well, it doesn't mean that driving cars is a bad thing either.
But here's the thing, and I'll take this to both of you, but Jeff, just back to you for a moment. I was looking back and kind of reminding myself about the flash crash, 2010, and one of the things that happened there that, as best we know, is that there was a human error, that fat finger trade, if you will, but the algorithmic trading made it worse. That's why we lost 1,000 points that day. So I know that you're saying that it's better than human error, but the two combined have created some massive headaches for our markets. I'm sorry, Ron, real quick. I want to take that to Jeff, and I'll come back to you for the same thing.
Yeah, I think the reality is that regardless, computers are here to stay. I mean, the way that the markets the spreads have tightened and the impetus, you have to be fast. You can't be, like, no one can be as fast as these computers are in processing data and making markets. So market makers are all going to be electronic, and the computer's here to stay. So the question is not, should computers be versus human beings? The question is, how do we tighten things up so when there's a mistake in the computers, it doesn't go rampant like it did in the flash crash?
Okay, Ron Geffner, last word?
So the thing is, we're discussing right now the impact on the market, but some of the things at the very heart of what we're discussing are really controls at the firm that may not impact the issuer of a security or an instrument. And it's really more about instituting some better policing within those institutions, somewhat of on a self-enforced basis, and having the ramifications be greater than what they are.
Ron Geffner out of San Francisco, and Jeff Ma as well. Gentlemen, thanks to both of you. It is a fascinating discussion that we're going to stay on. I really appreciate you both coming on.
Thanks, Cheryl. Have a great weekend.
All right.
All right.
Marihuana que fumar.